General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
I gotta wrap my Friday in because it don't make sense to do two separate videos. So Friday was the 7th, Friday, March 7th. This was just a target miss. Target missed. Price dropped. NFP and then rallied after Powell spoke. NFP was good too. That like stop and turn around vibes. All right, hold on. I should have grabbed me some Celsiuses. They don't sell for like if I want to get one free or something. All right, so we in week 2. Week 2. Look at this. Bearishness only went down 3%. A little cash on the side. A little push up. Cash on the side. 3%. And bullishness is about unchanged. COT on VIX, we still long. It was 191, 123 last week. So you see them easing up on being heavy long the VIX. That is a good metric to week by week track those contracts. Even here, it's like it's balancing itself out, which I don't think. Like non-commercials are selling, commercials are selling. Commercials sold, now they're buying. So we can kind of see. Let's see the commercials. Offloading long positions. News, CPI week. It's usually a Wednesday. midweek reversal template or reversal profile. CME Fed Watch. Is this Discord going crazy? Telegram making noise. CME Fed Watch is 98% no change for this month. May 7th is going down, so they starting to price in cuts, rate cuts. May doesn't look like they want to cut. We will see after CPI this week. If this goes up. But June, they're definitely pricing in the cut. 81% chance in June. Earnings, nothing top 10 here. Nothing top 10 here. So no market movers for NASDAQ. This week is going to be about CPI. CPI, we usually get that strong candle and we don't come back. CPI can set the trend for the month. No matter what. COT for NASDAQ. Commercials are still short. Let's see if they eased off. So let's go to week 1. Uh, 152. Hold on, yeah, 152, 194. So let's go to week 2, 152, 194. /194 last week. Commercials still short. We actually went up. Commercial short position. Commercials are net long though, so keep that in mind. That's week by week. For over 12 months, it's net long. See the selling. I should have actually put this because this is always even. So non-commercials started buying. Non-commercials bought Angelo's. Non-commercials started buying. I think I did too many M's. Started buying. We can see there's some hedging going on. Got a seasonal open interest breakout. Note when COT hedging program is in the 12-month buy program or buy model. Dollar. Feel like the dollar needs to retrace. Then go lower again. This market's gonna be bullish. Monthly selling off. Rebalancing. Let me go here because here. Let me just draw this line from here and keep this here. Current tool only. Let's make this gray. This would be 50% of previous month's range. Put that at the bottom. And we could probably put that in the center. Yep, it's not in the way right there. Interesting. Rebalancing. Dip into previous month's range. Monthly selling off, rebalancing to previous month's range. It was only the first week of the month. Which is usually the Judas or the fake out. I get reaccumulation vibes. Like people will load up longs under old lows. Also note, we've seen buying from commercials at these levels. They get on the internet and tell you to be scared and sell, and then buy, and then when it starts rallying, you jump in late. This weekly fair value gap, I think Carry ICT Trader. We'll be looking at it. And I don't think they're wrong. I don't know what they're looking at, but I just think they're going to be looking at it. Also note, when we do rally, it's strong. I feel like this needs apostrophe or something for proper typing, I guess. Proper punctuation. Daily. Why is my header looking like that? Okay. Daily note, we're not closing below lows. So Thursday high is my first mile marker. Yeah. 4 hour note. Oh, how the H4 chart. This MT4 talk, H4. Know how the H4 chart is sitting on previous quarter low. That's not breaking or nothing. In the H1, we do have the dip. H1, we ran sell side liquidity and created an order block. We didn't break structure. To the upside. But we got a nice displacement. And respect of an H1 fair value gap. Keeping that H1 alive. Yeah. I'm looking for higher prices. And the bulls are back in town. Let me export this. That's what I'm looking at going into the week. That's that on that. Y'all have a good day. Peace.